Hello, namaste everyone. See, through this video, I would like to share the concept of tax loss harvesting. See, you still have time till 31st March to file your returns. Now, tax loss harvesting is a strategy to reduce your tax liability. See, what is done in tax loss harvesting? At present, you have two kinds of taxes. One is your short-term capital gains, the other is our long-term capital gains. See, the short-term capital gains are being taxed at the rate of 15% as of now, and the long-term capital gains are being taxed at the rate of 10%. Up to 1 lakh, the long-term capital gains is free. So let's say all those who have got Zerodha account, they must have received a notification. I have separately done a video detailing uh, detailing what this tax loss harvesting is and how you can reduce your tax liability. So the notification has a link, and that link takes you to the article, Zerodha article in Z Connect. Now, this is basically a short video to explain you what is tax loss harvesting and what is it that can be done to reduce your tax liability. So what we do in tax loss harvesting is at one end you have your short-term capital gains, and you have long-term capital gains. Now on both these gains you have to pay your taxes. As I said, short-term capital gains you have to pay at the rate of 15%, and the long-term capital gains you have to pay at the rate of 10%. But first 1 lakh long-term capital gains are free. So on the balance we have to pay 10%. Now this is your liability. So whatever short-term capital gains, long-term capital gains, both together is your liability. Now how this liability can be reduced? The way to reduce this liability is you also see in your report, are there any shares where you have unrealized short-term capital loss and unrealized long-term capital loss. Now you see both these in two types of your investments, mutual funds as well as shares. Now, short term is when you are holding your equity or mutual funds for less than 1 year, and long term is when you are holding your equity or mutual funds for more than 1 year. So, less than 1 year short term, more than 1 year long term. Very simple. Short term 15% tax, long term 10%. Up to 1 lakh it is free. So, above 1 lakh we have to pay 10%. Now, go into your unrealized short term loss shares and mutual funds, and go into your long-term unrealized uh, long-term losses in shares and mutual funds, and see which one you can sell. So you sell, and whatever the loss that is coming, but that you have to make this transaction before 31st March in order to reduce your liability in your current ITR, where you have time up to 31st March. Now, whatever that loss is, you can set off those losses against your gains. So, short tax loss tax loss harvesting is nothing but a strategy to set off your losses against your gains. So, whatever the loss that you are reducing, it is helping you to reduce your tax liability. And then the second thing is the importance of this strategy is that you can again buy. Suppose if you want to retain the shares that you have sold, you can buy those shares again after 2 days, because the expiry is of 2 days. You will get back your funds after 2 days. So you can again buy back the same shares or any other shares in the same sector. So this is that concept. This is that uh, idea uh, by virtue of which you can reduce your tax liability. So this is tax loss harvesting, and this is what I just shared. You can use that strategy to reduce your tax liability. That is it in this video. It is a short video to explain what this concept is and how this concept can be applied existentially so that you can reduce your tax liability, your tax burden. Moreover, since you have got 3-4 days to go, you have time till 31st March to file your returns for the last for the last fiscal year. So 21-22 fiscal, your time to file your returns till 31st of March. Thank you so much. Thank you for listening. That is it in this video. Thank you.